NVIDIA. NVIDIA provides high-performing GPUs and system on a chip platform. A system on a chip platform is basically um, it uses its software as a platform for to help clients design custom chips. That's basically what it is. Full disclosure: I own NVIDIA. Um, we'll, we'll get more into my ownership of it later on, but I own it. Good performing stock, but we'll get into detail with that later on. So financial performance. The net income margins have been deteriorating, however, still above the industry average of 18%. Now, the deterioration is caused by an increase in costs, especially R&D. R&D has really, the growth in R&D has really exploded. Cost of growth have been growing above the 9% industry average. The same is true for R&D, which has also been growing above the industry average of 10%. And that all explains why the margins have been declining a bit. R&D as a percentage of revenue is well above the industry average of about 20%. All right. Now the increase in cost, it's hard to justify against it because it is a necessity. You know, if you look at the fact that the increase in cost, yes, they deteriorated my margins a bit. However, look at my growth. That can be explained by COVID. Look at that. Look at that bounce back. That is a lot of market share that you're getting, a lot of market shares that you are retaining. So you're growing. So revenues are growing about 53%. On average 22% for the 3-year period 2019, 2020, 2021, well above the industry average of 8%. So the costs, yes, they've deteriorated my margins slightly. However, they're resulting in a return in the form of growth in revenue, growth in market share, as well as retention of market share. Net income has been growing at a compound rate of 16% over the past 3 years. So again, it's hard to argue against these costs. These costs are justified in providing returns in the form of growth in net income as well as growth in revenue. Furthermore, it is important to note that in the GPU market, NVIDIA is basically unjust. They are competitors, but really dominate that market, especially with regards to gaming. So NVIDIA is in a strong, aggressively dominant market position that all other competitors are basically, they are playing catch up. Such spending is not excessive, but rather essential to NVIDIA's continued dominance. Now, above industry growth in costs, above industry growth in um, revenue, and above industry investment in R&D, above industry returns in the form of growth in revenue. So good company, costs are justified, costs are resulting in a return. Now the ROE, above the industry average is about 26%, so it's a good indicator that NVIDIA is achieving above market returns on equity invested in operations. Perfect. Financial position. Current ratio is very impressive. It's beyond impressive. It's as close to perfect as perfect you can get. The industry average is 2.37. NVIDIA's average in current ratio is 6.57. So very good. As a test, same with the current ratio, it is highly impressive. Consider the industry average is 1.88, and look at the average for the asset test. Basically more than double. So very good performance. So very low risk, making the balance sheet very, very attractive. So very low liquidity risk, making that balance sheet very, very, very attractive. Now, both the current ratio and asset test ratio, yeah, they have declined quite radically. But even with the decline, the performance is still above the industry average, driven by the more than $11.5 billion in cash and cash equivalents as well as market securities. So NVIDIA has a lot of cash on its balance sheet, a lot of cash. Again, that just highlights its strong liquidity, so the strong liquidity position its balance sheet finds itself in. And remember, it's important to note that the decline, any in part is due to the fact that short-term debt has increased. So the decline in the asset as well as the current ratio, the decline is made with increase in short-term debt. Not a worrying factor, not something to throw hissy fit about it. It is expected. These are growing pains. NVIDIA is using a lot of its cash to fund its growth, to improve its operations. So not really something. So this decline, not something to really, cry about, considering it's well above industry average and it is solid and does not indicate any heightened increase in liquidity risk. So very, very good. Um, Inventory days have underperformed industry average. Industry average is just over 101 days. NVIDIA's average inventory days are sitting at just over 106. Alright, so there is an underperformance, but however, the inventory days, when you look at the inventory days and you look at the asset test ratio and the current ratio, it really does not indicate the company that is heading into liquidity ruin. Even though inventory days are above industry average, just slightly, it has not derailed the liquidity of this company. The liquidity of NVIDIA's balance sheet is incredibly attractive. Right. So even though NVIDIA does hold inventory for longer than the industry average, this has really not derailed the liquidity of the balance sheet. Still, there's no increased risk on the balance sheet. The balance sheet is still fairly liquid. Debt to equity ratio has increased, but considering that the industry average is 126, it's still below the industry average. So the debt to equity ratio does not highlight significant increase in financial risk. Still a very attractive balance sheet. It still has enough room to grow to add debt without increasing financial risk. That 70%, industry average is 126%, so it still has a lot of room to run before it can even start to wreck the attractiveness of the balance sheet. The balance sheet very attractive, very liquid, not highly geared, very, very low risk balance sheet. Now the cash position, the cash margin has outperformed the industry average. Industry average 32%. Strong indication that NVIDIA's operations can generate cash, and NVIDIA is productive in generating cash. On average, it turns 36% of its revenue into cash. That's very, very good. There has been a deterioration, but there's no sign. Looking at everything, looking at my performance, looking at the returns it gets on capital, looking at the balance sheet, looking at my liquidity and financial risk, looking at all of that, looking at the cash from operations model. There is no indication for me that NVIDIA is in decline. The sufficiency of cash flow has deteriorated, but still overperformed the industry average. Industry average is 0.84, and the average for NVIDIA is at 2.45. So that is good. That is very good. Now, the sufficient of cash flow, even though there has been a deterioration looking at 2020 to 2021, that's being driven by acquisitions as well as improvement in operations through investment. So it's not, just losing money. It's not just losing money. It's actually using cash from operations to invest in operations to make them better and to add long-term shareholder value. So it's very efficient with its cash use. I like it. That is very pleasing. So the overall cash position of NVIDIA is very positive. Now in 2019, um, that ratio is a bit abnormal, but that's because there was a buyback and a dividend yield. But normally NVIDIA, but ever since then NVIDIA has been issuing a dividend. Dividend yield is low. Now considering that NVIDIA is in the ascendancy, I really don't expect it to provide much shareholder returns. I expect it to reinvest a large part of cash generated from operations in said operations to improve long-term shareholder value. So I really don't expect it to pay what 10%. I mean, at 22%, it's way below the industry average of 46%. That wasn't an abnormality. So I expect it to keep its returns quite tight at these single digits because it's under sentencing and it's really trying to protect its market share and grow its market share and really be a dominant player. So I expect it to basically, instead of returning with cash to shareholders, I expect them to reinvest said cash in operation to grow the business further. At a P of 34, just over 34, it's well below the industry average of just over 40. So it makes it a very attractive company. Overall, NVIDIA, very attractive company. Again, that just goes into that market correction that's been happening since the beginning of the year. But again, a very attractive company at a very cheap PE. Yeah, thumbs up for me from this company. I like it.